Inflation, a lingering challenge for the Federal Reserve. Despite significant progress in curbing soaring prices, the Federal Reserve, Fed, remains vigilant in its battle against persistent inflation. While the annual rate of inflation has decelerated from its peak of 3.5% in March to 3.4% in April, it continues to surpass the Fed's target of 2%. This deviation poses a substantial concern for policymakers, who have been actively implementing measures to bring inflation under control. In an effort to quell inflationary pressures, the Fed has steadily raised interest rates to their highest levels in over 2 decades. However, recent policy meetings have been marked by a cautious approach, with the central bank opting to maintain rates at their current levels for the time being. Minutes from the latest meeting indicate that while inflation has moderated somewhat, further progress towards the Fed's 2% objective has stalled in recent months. Despite policymakers' expectations that inflation will eventually return to the target range, they acknowledge that the disinflationary process is taking longer than initially anticipated. This extended timeline has raised concerns among some Fed officials, who have even suggested the possibility of additional rate hikes if inflation remains elevated. In the midst of this economic uncertainty, a recent Harris poll reveals that a majority of Americans mistakenly believe the U.S. is experiencing a recession, and many still perceive that inflation is on the rise. While the economy is not officially in recession and inflation has been on a declining trend, the lingering presence of price pressures has prompted the Fed to carefully consider its next steps. As the November presidential elections approach, both President Joe Biden and former President Donald Trump have attempted to shape public perception on inflation. Biden has emphasized the recent decline in inflation, while Trump has placed blame on the current administration's policies. The Fed's continued focus on inflation management is crucial for maintaining economic stability in the face of ongoing challenges. The central bank's decisions regarding interest rates will have significant implications for the economy, and its ability to achieve its inflation target will be closely monitored by policymakers and market observers alike. The evolving inflation dynamics and the Fed's response will undoubtedly be key factors shaping the economic landscape in the months and years to come.